Welcome to Market Technical Analysis by InTheMoneyStocks.com for Friday, January 11th, 2008. Well, once again, it was an interesting day in the markets, and it seems like every day we say that, but it's true. Just the moves are just so dramatic in this type of a market because there's so much fear, and fear drives a market. I mean, there are two things that drive a market. One is greed to the upside and fear to the downside. And whichever one has a big leg on the others or a big upside on the others is obviously going to create the more volatility that way. So as we've seen the prior 2 days, the rally which we had called in this market, it was a muted rally. I mean, yes, as we said in the videos, we said, look for upside. We're going to get a bounce here. We're neutral to upside bounce going into the last few days, and that's exactly what we got. But the rallies were nothing that amazing. The only thing, in my opinion, that's going to really create a big-time rally is a Fed cut before the next meeting, which may come next week, although we're going to talk a little bit about that. Now, let's talk a little bit about the ES futures here. And you can see the move on the daily here. This is the daily pattern. And we talked about the M pattern here, and let me take out my trend tool so we can really get into this. But as we talked about everything, yesterday we talked and said, okay, now folks, we've had the 2-day rally, and in yesterday's video we switched our bias back to kind of a choppy market, ups and downs, unless the Fed cuts, and that's exactly what we got today. After the 2 days in a row up, with this much negative bias, we expected a down day coming in at some point, whether or not it was today or not, but it turned out to be today. And if the Fed had cut, we would have had a big up day, but obviously until they cut, the big up day is going to be on hold. Now, if the Fed cuts before the meeting, a quarter basis point, you'll see a rally. You will see a rally. It's just a matter of how much, I would think. It won't be a huge rally. The 50 basis point cut before the meeting would be huge because I think people would anticipate a quarter at least at the next meeting, which would be a point set or 75 basis point in all. Now, this is the one caveat, and before we get into the charts here, I'm going to just talk a little bit about this. The CPI and PPI numbers are coming out next week. These are huge for the market. I cannot stress enough how big these are for the market. This is exactly the issue, folks. The PPI and CPI numbers are going to tell us how much inflation is out there. All right, should they come in hotter, that means the Fed cannot cut as much or possibly will not cut as much as the market wants. So this number is, I cannot stress how big it's going to be. You're going to see a giant move on the PPI numbers and the CPI numbers, probably bigger on the CPI, because whatever's passed to the consumer, being the consumer price index, is more important to the economy, obviously, because that's how it's consumer spending based. If everything's costing us more and we're already pulling back from spending too much, then that's going to be the effect on it, and that's going to be the bigger one. Now, if the numbers come in very muted, meaning not showing a lot of inflation in the CPI, then you may see a humongous rally in the market or a large rally, because that's going to dictate that the Fed can cut as much as they need to here without too much worry about inflation at this time. So keep an eye on that number for next week. I believe it's coming out mid to late week. We'll talk about it more next week, obviously, as it gets closer. Now, today we saw a lot of downside in the market. It was just a constant sell all day. We had a little bit of an uptime during the morning, and you can see, look at this trend here, folks. It's almost a perfect parallel lines traveling up, and you can see how you just basically stayed in this trend, and then once we broke through this trend, that's when the downside started in the afternoon. And right around 12:30 that happened, where we closed right here on that 50 and 200 moving averages. The next candle we got to push lower, and once we closed well below all those moving averages, everything was dropping in the market. You got a few bounces along the way, but just for the most part, a pretty big drop here. And I'm just looking at this chart to see if there's any other patterns here. And interestingly enough, then it looks like we got a parallel lines to the downside here, and we stayed in a trend on the way down. So you can just see how much symmetry is in this market. You could come up with some geometric designs, I'm sure, from the way the market trades, and it's just fascinating to me to find these patterns because they can tell you which way the market's going. If you just look at it right here, once you got that close below, here's the move to the moving average, you got the close below, you short the market, and you can work it all the way back down here. Even on the bounces, you're only touching the top of this trend right here. And it's right into that 20 moving average as well, so you have multiple resistance points right there. So fascinating overall. Volume was lighter today, folks. About 700,000 contracts on the ES futures lighter. So that's one thing to keep in mind as well. Now, one thing that bothers me here in the markets is this, okay? Unless the Fed cuts, I don't see a lot of upside in this market. People are too worried. Unless something happens, whether it's a stimulus package or a Fed cut, I really don't see what's the driving force. We got the bounce already. We shifted our position now to pretty much a neutral unless there's a rate cut coming back in. So then the question is, well, what will make us bounce? Because yes, we got the bounce already. That got the stochastics up here a little bit. Now they can actually go back to the lows again. And what's negative here is that yesterday's move up, we closed there. Then we gapped down today, but the market closed below yesterday's low. So in my opinion, unless we get a rate cut or a stimulus package of some sorts next week, or then again, I'm talking early in the week, because once the CPI and PPI numbers come, that's a whole new ballgame. So basically, you're talking Monday or Tuesday here. Unless we get some sort of stimulus on Monday or Tuesday, you got to assume we retest the 2,600 mark. Unless there's some sort of big news out there. If there's no news, you're going to retest. Because with that close below yesterday's low, on a technical level, that's a bearish sign. All right, the market could not close above. It just sold back, took out all of yesterday's gains, and actually closed or moved lower here. And not only that, but we are right here at this line, which is support. And this is deep, definite support, this line. This is basically the open of the big down day here that made us that tail. And you can see how yesterday kind of tested it, and then today we closed right on that. So again, it is a possibility that unless we get some news Monday or Tuesday, we will retest that 24.02 to 24.10 level on the Nasdaq. And if the PPI, CPI numbers don't come out pretty, and if the Fed does not do some sort of cut or the government do a stimulus package, you could be looking at a big move down again. Now, we talked about, again, this MA pattern here in the markets. Now, could this be all the A? I mean, is that the extent of it? I don't know. We won't know until the Fed gets done doing what they're doing and the CPI numbers come out. Usually you have a little bit better of an A, but hey, you never know. In this type of a situation, when there's so much negatives out there and people are so skittish, you never know. Maybe that's the extent of the A pattern. Maybe now we're moving lower. Again, I got to stay as a neutral bias because it very well likely we have more of a move up, especially with the Fed lurking out there. But at the same time, the Fed doesn't show up. The CPI, PPI numbers are negative, off to the races to the downside, probably to March lows at this point. You got to figure March lows come into play at this point on the downside should we break lower. All right, so a lot going on out there with the charts. A lot. Intraday, again, we showed you those patterns. One thing I am noticing, folks, is the Nasdaq is very weak based on the large cap tech. Stocks like Apple, Research in Motion, Baidu, Google, all very, very weak. These were what was holding the market up. All right, and let's look at Apple's chart here. All right, look at even when we dropped earlier over here in August, in November, these stocks were still in a beautiful uptrend. Look at this uptrend. This uptrend now is broken, and you can draw a trend line on Apple right here. See, so once you got below here, this is a broken chart. Not only that, but now you have the 50 moving average right here as an upside resistance point on any bounces, and the 20 right above that as more resistance. So you got to look at this and say these patterns on these large cap tech, which was what was leading the market up, is not looking so pretty. All right, and again, listen, it's as I always say, it's up to the Fed whether or not they're going to come out and save the day, or at least save it preliminary. In the near term. I don't think there's anything that can be done in the long term. Whatever they do is going to give the market maybe a few days worth of a strong bounce, maybe a week worth. But ultimately, these rate cuts take 6 to 12 months to work into the economy, and at this point, things are not pretty out there. We all know about the credit crunch, the housing, the subprime. Consumers are not spending. The data from the retail sales in December was not pretty, folks, except for maybe Walmart out there, but just not pretty at all. All right, now let's talk a little bit about some runners today in stocks, because there were some stocks moving. There were some stocks that people made money in the chat room on, and the chat room continues even on down days like this. You're making money on the longs and on the shorts possible here. So let's take a look. What do we have first? Right off the bat, we had Seed. Seed was a huge play again today. Look at this late day run. All right, it was up all day, traded in this beautiful range here. All right, and just looking at the chart here, you can see again these parallel lines. All right, and what happened with this? See how this kind of coincided with the 20 moving average? You got this push up right into that trend line and the 20 moving average. It closed above, it retested, blasted off. The second you took out that high right there of that previous candle when it was above that 20, that's the blast off signal right there. All right, and look at that move up. You're talking about a $10 stock. Actually, it was a $9 stock going up $2 today. And this is all agricultural stocks are hot. Now, they're a little too high, in my opinion, to buy. I'm not stepping up at this chart. When you could have had it over here, or even over here, or even over here to buy it now. I mean, you're talking about a stock that's basically doubled in value, if not more lately.
So it's a little expensive, but it could run more. As I always say, I'm key. I love my entry points. I wait for perfect entry points. If it doesn't come there, then I pass and move on to the next one. There's always another stock around the road, around the corner to trade, folks, all right? In tune with that coin. Look at this chart. In the market like this, for a chart to be like this, it's amazing. Now, again, there's no way in heck I'm going near this stock. There's way too much risk in it at this point, but that doesn't mean it can't run another few dollars. You know, anything, I've seen stocks like the solar stocks run hundreds of percents, but, you know, as I say, you know, I can't go near it. It's not my style of a trade. I like dead bottoms, to find the dead bottom and wait for them to run themselves and be in at the dead bottom, not pick up something 100% higher at this point. All right, folks, that's all we got for today. Keep watching that CPI, PPI next week, and the Fed and the government. Otherwise, there could be pressure in this market. Have a wonderful weekend. Take care. Thank you all for watching.